Hello and welcome to NDTV Profit. You're watching IPO Adda and my guest today is from Gala Precision Engineering. It's a company which is into the manufacturing of springs and fasteners. The company's IPO is opening on September 2nd and closes on September 4th. The price band is 503 to 529 per share and the company is raising nearly 168 crore shares. 168 crore rupees, which includes a fresh issue of 135.3 crores. And joining me today is Mr. Kirit Vishanji Gala, who is the chairman and managing director of the company, and Balakrishnan Jalan, who is the ED of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Mr. Gala, to begin with, give us a sense of your operations, which segments you operate in, and what kind of what is the profile of your customers?
Okay. So basically, as you said, we are mainly in two product verticals, springs and fasteners, and in general the broad category is in precision engineering. And our customers have three market segments clearly. We do renewable energy, particularly wind turbines and hydro turbines OEMs, and then we do industrials, which has several other sub-segments. And we do mobility in automotive and railways.
Okay.
So this is the customer. So main customers are all multinational customers. Basically having global presence. So and hence we do mainly India, Europe, and USA, and some part of China.
Mr. Jalan, you're raising nearly 135 crores. Can you give us an understanding of how and where you're going to use this amount?
Yeah, so this is 168 crore IPO on upper cap of 529 rupees. Out of that, the offer for sale share of 6,16,000 share, then 32 crore something will go to the shareholder directly, and company will be getting 135 crore against the fresh equity. Out of that, we have planned as per the RHP file. 37 crore will be utilizing for the Chennai project, 11 crore will be utilizing for the Vada capex, 46 crore will be utilizing for repayment of debt, and some issue expenses, and we will be keeping some money for the general corpus fund.
Mr. Gala, give us a sense of your operations as well, the scale of your operations and the size of your operations. You have two manufacturing plants currently, and I think you're going to use the IPO proceeds to bring in the third plant in near Chennai, if I'm not wrong. So give us a sense of what is the kind of capacity that you work in, and how will this expansion help you?
Sure. So last year in FY24, we did 200 crores, all from two plants in Vada. Vada is approximately 50 kilometers from Thane. So, it's quite close to Bombay. And third plant is coming up in Chennai. And in terms of capacity, we have almost 250 crore in terms of volume capacity at Vada. And we are putting up around 50 crores or 48 to 50 crores in Chennai to create a capacity of 110 to 120 crores.
Okay. So, what will be the Chennai capacity taking care of?
Yeah, so basically Chennai, we are putting the plant for the fastener, mainly the bolt manufacturing, which the product which we are added recently, and the stud which we are producing at Vada as well.
Okay. Give me also a sense of your financial performance. You had a EBITDA margin of 19+% in FY24, and that's gone up from FY23. Is that the baseline EBITDA margin that you work on, or is there enough room to bring it go to beyond 20% also in your segment?
Yeah, so basically over a period we added a lot of different products, and we have done a lot of cost reduction project which resulted into a EBITDA of 20%. And at this point we want to say that we will be maintaining this even at the high growth which we are planning to do in future.
Just to clarification, your PAT numbers were slightly lower over previous years. So any particular reason why that, despite the fact that the top line was higher?
Yeah, so basically, if we see the before exceptional income, then the PAT has improved from 14.5 to 15 crore to 24 crore. In FY23, we have sold Wagle one over building, and we have sold one small division of fastener division. Because of that, there was an exceptional income of 8.5 crore. So if you remove that, then actually speaking, the before exceptional PAT has improved from 14.5, 15 to 24 crore.
Okay. Mr. Gala, give me a sense of your
machine division actually.
Fastener division, machine division. Yeah. Sorry.
Yes, sir.
Okay. Mr. Gala, give me a sense of your exports, because nearly 37.5% of your revenues come from exports. Which are the geographies that you supply to, and what is the kind of potential for exports going up? Because it's been going up over the last 3 years, if I can see the numbers. How do you see exports contributing to your top line going forward?
So, so it's very interesting. Our major markets for exports has been Europe, and we have been extremely successful in Europe because of multinational customers. And in fact, we have always competed with European companies to make sure that in Europe we keep the edge of competitive edge in terms of quality and service. Also, we export a little bit to China, and interestingly, some of our products are European quality, so in China they cannot match these qualities. So we are able to export to China as well. And now, in looking forward, we will maintain around 40% exports. That's how we are looking at business. Particularly, we are focusing on US market. And US market, my son joined 3 years back, and he is completely focusing on US market. So I think this will continue. So but we are quite clear we are going to focus on Europe and US as major markets for exports.
Okay. Give me can you also give us an idea of the kind of order book that you're sitting on? Because you supply directly to OEMs, I understand there would be in advance orders that comes in. So how do you go about processing of the order, and what is the kind of order book that you're sitting on?
Yeah. So basically, we supply to OEM, and also to some portion of the sale goes to through distributor channel. And in OEM, they normally give a visibility of next 1 year, and year on year they enter into some type of understanding or contract. Different customer have a different understanding, and they keep on giving us the projection for 6 to 12 months and a firm schedule for next 2 to 4 months. Each customer to customer there is but more or less we get a visibility of at least 3 to 4 months where we can do a more raw material planning or capacity planning. Same with the distributor, they give an order in advance for 3 to 6 months, and that's how we get the visibility.
What is the current order book that you have?
So it's again, as he says, for example, take ABB Germany. We have been supplying them these springs for I think more than 10 years, and it's always there. I mean, it's not about having a particular order book at a point of time. These are all, as we go on adding OEMs and these kind of customers, they keep, the orders are always on as normal practice. So it comes many times they give yearly forecasts, and most of the time they give monthly schedules.
Correct.
Okay. And how do you manage the raw material cost, because that's also one of the components. You depend on steel. So how do you manage the raw material cost in such a scenario when you don't have have a visibility beyond 3 months, because your short term orders or order books are 3 to 4 months, right?
Yeah, so just to give you more understanding, so basically we operate in a precision engineering where our whole cycle starts from the product development, product validations, and then they onboard us on their vendor list and all. So they do a lot of effort in approving us, and then they work with us for more than 3-5 years. So it's not about our order reflect over the future. It's basically the broad understanding is there. Annual buying, they will be buying so and so. Year on year, they will be buying so and so parts and quantities and all. It's only thing that conversion into an actual order they give in advance 3 to 6 months from clarity. This is number one. So it's not we don't have a visibility beyond 6 months or 2 years. So that is always there, and we see that these are the existing customer going to give me this much top line. Apart from there are new customer or new product which we are keep on adding, so we get reasonably visibility in the future. Number two, with that plus your historical number, we are always plan raw material in advance, 3 to 6 months in advance, because there is a lead time of 2 to 3 months from the supplier side. There is a transit time, plus we have to keep some raw material order in stock as well. So considering all these things, we able to plan raw material without any much hurdle. As far as the price is concerned, we have understanding with customer. If there is any increase or decrease in the price of more than 5%, so as an annual understanding, we freeze the price based on some price, raw material prices. But if there is a very heavy fluctuation, like post-COVID, immediately there was a raw material increase by 20%. So we able to discuss with customer and get that price increase from the customer. So that we can pass the price increase to the customer.
Your revenue, if I look at your revenue breakup, it's spread between industrials, renewable energy and mobility. You spoke about the fact that, renewable, you are looking at hydro and, wind energy. In the mobility space, can give us some more clarity on, because you're doing railways where you use those springs. But I understand that you are entering into brake springs and others for the two-wheeler and four-wheeler space. So how big is that opportunity for you?
In terms of, you're talking about mobility as a sector. So
yes.
basically, let me tell you, we are, supplying springs to companies like Schaeffler in transmission, for example. And these are used in, heavy commercial vehicles, light commercial vehicles, etc. So fundamentally, when you say mobility, railway is a fast-growing, emerging business where we have a small presence, but we are already present in metro and high-speed trains, and we collaborate with some private players which are supplying to railways in terms of technology upgradation. In terms of other than that, we don't do anything which is going to be transformed or changed because of EVs. So, for example, we have developed sitting belt system. We do sitting, we do transmission, which is going to continue with not being affected mainly by EV passenger cars. So, we focused on the areas mainly on transmission and safety.
Okay, and there's no plan to expand your presence into the two-wheeler and four-wheeler space specifically?
Two-wheeler normally is a very commoditized, market segment. And though we have some presence like Brembo Brakes and other companies which are Endurance, for example, which where we do some critical parts for brakes. But in general, our strategy is more around larger vehicles, earth-moving equipments, and other areas, rather than this specific segment.
Mr. Jalan, give me a sense of, you're going to use some of the money to repay your debt. Once this debt would be repaid, what would be the kind of impact that will flow into the bottom line?
Yeah, so debt level at present is around 55 crore. And we will be repaying around 46 crore. Out of that, the debt will remain around 10 crore. And hence, we are seeing the drastic reduction in the interest cost for the 1 or 2 year. And going forward in future, as and when required, we will be raising the loan. So the interest cost will reduce substantially.
Okay, and how?
So actually, I was just thinking of the mathematics.
Yeah, please go on.
So approximately 46 crore, you can save simply interest for 46 crore loan repayment. The approximately on average cost of 7.5–8%, which will be will reduce. So the simple arithmetic, 3.5 crore, 4 crore will reduce from
before
the
tax.
Before tax, PAT before tax will reduce.
I mean, yeah.
PBT will improve by 3.5 crore.
Improve by 3.5 crore.
Correct.
Give me also a sense of your cash flows as well. How your cash flows from operations move, if you can give us an idea of that.
Yeah, so basically in last 3 years, the cash flows were very, very healthy, positive, and that all the data are there in RHP and profit plus depreciation, even after considering the fund going in the net working capital, we are positive from operation. and more or less in last 3-4 years we able to in fact reduce the over borrowing as well. So with this equity infusion, we will going to have more better leverage, and we will be utilizing more fund aggressively for our future growth.
A little understanding of your trade receivables as well, because your trade receivables have been increasing over the last 3 years. Any particular reason why it's increasing?
Yeah. So in absolute number, yes, they are increasing, but mainly because of the growth of almost 24% plus year on year. So if you see the number of days, they are around 70% if we consider. So this is mainly because we have a local market sale of almost 63%, where we have a payment term of 45 to 60 days after receipt of the goods. So they get a material in 10 to 20 days, and then after that there is a payment cycle, and then we get on average in 70 days. Same way in the export market, they receive the material at their end, and after that they process, and there is a payment cycle. On average 30 to 60 days is a credit period. So in export market also we get it around 70 days, and we are seeing on 70 days will be there in future as well.
Okay, give me a final take on the very few things which I from the industry point of view. How do you see this industry growing in, and at what rate we are growing, and do you see enough scope coming in from domestic market?
Yeah, so I will just brief, but then Mr. Kate Gala surely will add his flavor. So basically we are seeing India as an economic is very strong and going with a very steady rate of growth rate, and a lot of investments are flowing. So I don't need to say too much about the overall economic condition of India, but we are overall gaga about the Indian economic and the type of market study we did in all the 3 segments, particularly in fastener segment, which Indian fastener industry is going to grow by 18% year on year. That type of market study done by One Electis, UC report and all. So we are very positive about the Indian market, and going forward we are seeing we have again good potential for our product, and that's why we are raising this equity, and we are going to have a capex in Chennai and Vada. So we are very positive about going forward in future. Yeah, Mr. Kirit Gala can
I want to add. So let's understand. We have 3 very attractive market segments. So which is renewable energy, industrials, and mobility. On top of that, we have marquee customers. I mean, more than 175 customers, and they are all global players, multinationals. So, that makes a very classic case of a fantastic customer relationship, and increasing the wallet share as well as increasing the product range and hence sales with them. That is at one end. What we have done in last several years, we have added products with much larger markets. So, for example, we started with disc springs, and then we added coil spring, which is 5 times larger market. And now we are talking about fasteners, which is a 100 billion market globally. Now, in these fasteners, we are not just doing all the fasteners, but we are selecting fasteners, where the criticalness is very important. Hence, we can keep our margin, but the opportunity sizes are much larger. So, and there is a cross-selling opportunity across these 3 industry verticals and across customers. So I think this is what makes this model very, very attractive and interesting.
Gentlemen, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit. Your IPO is opening on September 2nd, closes on 4th. 503 to 529 is the price band. It is a fresh issue of 135 crores and OFS of 32.6 crores, and that gives you a company value of roughly around 670 crores at the upper end of the price band. Thank you for joining us today.